What's going on, everybody? It's Matt, aka the Lumberjack Landlord, here with his good buddy Mike Zuber and Dion from Dion Talk Financial Freedom. Good to have you guys here this morning. We are going to cover something that, holy cow, is probably 20 to 25% of the questions that we get answered is this one question. Now, usually it's not a question. It's usually more, hey, you're idiots. It's going to be this way.
There's a lot of confident people out there. Yes.
yeah. And why wouldn't they be? Like, they've been in it for 7 minutes. So anyway, I wanted to talk about today, and the purpose of this video is we're going to answer the question based on historical data. Is 2023 going to be worse than 2008? So Mike, you've invested a ton of time in putting together this amazing spreadsheet, over 50 years of data. I would defer to you and say, let's go to the data.
Yeah, we'll absolutely will. But I want to be clear on a couple of things. My position as of October 21st is that 2023 is going to be worse than 08 on many, many levels.
Okay.
But when people have this conversation, they are passionately saying, usually because we're a housing channel, that housing is going to be worse than 08. And as somebody who invested through that cycle, that is hard for me to digest.
Agreed.
But again, on the economic level, worse, probably a lot worse. So again, I have the data. We can really talk about this in detail. But before we bring it up, Dion, kind of what are your thoughts when we hear people talk about 2023 being worse than 08? What do you hear when you hear that?
Same thing, since our content so heavily revolves around one rental at a time, like we're literally buying rentals. People are asking, should I not buy because next year is going to be worse? And to me, that's, if it's right, let's say housing next year was worse than 2008. It's the right time to buy. Buy and hold investors in 2008 did great. Who cares if your value went down? Rents went up in most markets. I've invested every year for the last decade, planning on next year, every year, being worse than 2008. Diversified property locations, diversified tenant types, all of the ways that I've talked about, being able to, this year, with all of the chaos and uncertainty and rising rates going on, walk away from a 6-figure job that I liked and not care. So yes, next year will be worse than 2008 in a lot of ways, especially for the people who have an income from a W-2 job and haven't gotten the cash flowing assets, haven't listened to the advice that we've been saying for years or in the last decades, trying to get onto the property ladder. So I definitely agree with Mike. I'm glad you worded it that way. I wouldn't have came up with that. It's going to be worse in a lot of ways. I don't think it's going to be worse for buy and hold investors. Even if you bought today and this was the peak, and then it dropped 20% in the next year.
Yeah.
Yeah.
So let's go ahead.
I can honestly attest to the fact that Dion was fully subscribed to the Dilligaff effect on leaving his job. It was.
I have no idea what that.
What's
word
beautiful
means.
is that's the second time Mike hasn't known what that meant.
It doesn't even look it up. I'll text it to you, Bob. I'll text it too. I'll text it, like, because I can't say it on the channel.
Oh, okay.
You didn't even look it up. Come
no,
on.
I don't care.
Just,
I've already forgotten what the word was.
Dilligaff. Jeez. All right, let's see the spreadsheet, my man.
All right, here we go. So one of the things I want to do is you brought up something in video number 1 today, talking about interest rates. Since I have the data, and oh, by the way, we give it away for free.
Yes.
You can go get it yourself.
Yes.
All right. So we talk about interest rates. So again, folks, just so you know, this is not my made up data. We always list the source where we get the data. So if you want to argue with it, go look at the Fed or census or whatever, all of that there. So we talked about interest rates. How long did it take interest rates to go down? And this is what scared me.
Zoom had to go to such a degree with this document. Yeah. You even made it less fun.
Exactly. There's so much going on here. So let's look at interest
in this thing.
So let's look at interest rates in 78. They were 9%.
Yes.
So they're 11. 13, 16, 16, 13, 13, 12, 10, 10. Oh, Jesus. 10. Oi. So it went until 1991 until we got under 10 again. So how many years is that?
I think.
Wow, that's over a decade.
12,
so the entire 80s were higher than 1979.
And I think
Or
something important to note
1978,
there
sorry, 78.
is they didn't go from 10 to 4,
No.
right? They went 10 to 9.25, 8.39. They're not going to drop down like they did in 2020 because we're not, unless we have another something that shuts down the entire economy.
So let's also, so I like to also talk about like real pain versus relative pain. When we're
Okay.
looking at that, factually, the numbers are correct, that it was basically 12 years that it took to get below that number, right?
Mhm.
It took 12 years to dip below. However, it took 6 years to not be acutely painful, i.e. not just 10%, like 1 point higher, because that's the way it was in like the mid to late 80s. It was really high for 9, 80, 81, 82, 83, 84, 85. Then you see a massive 200 basis point shift.
Yeah,
But
that's a good point.
you were in a lot of pain for 7 years. You
Yeah,
went
and what's
200 basis points higher from 78
Yeah.
to 79.
Mhm.
That's what I'm calling that acute pain, where people are thinking that these 5-year mortgages, and 5 years I'll be fine. You better hope it's not 1978.
Yeah, and again, this is how I tie all of this together, right? Rates interesting to me, but then I actually look at transactions, right? The big thing I called very early, and now people are agreeing with, is transactions are going down.
Agreed.
So again, right, rate. So let's go back to 78. That was the last time they were below 10%. So we did 4.8 million homes that year. Look at this.
Oh,
We didn't
Mike,
get
we're
back
getting, think about
we didn't,
this.
oh my goodness, we didn't get back to 4.8 till
20 years.
geez. Wow.
Yeah, 20 years.
So here's the question that I
Almost.
have.
Wow.
In the 70s, I'm not sure which came first, the, you know, the carrot or the cart or however that works. In the 70s, we started having more people with 2 incomes per household. Like
Sure.
before that, it was the 1 income can support the household. And some will say inflation caused the spouse to have to go to work. Some people will say the spouse is going to work caused inflation.
Correct.
So right now we have massive inflation going on
Mhm.
and already a 2 income household.
Mhm.
I've already talked to Sam and Bryn, and they'll be working starting at the end of the
Work the
school year.
kids, side hustles.
I mean,
yes.
they're 4 and 3. It's time they start pulling their own weight. So I think that's reasonable. But yeah, so Mike, this is what I was talking about when I was talking to people and saying, if you just look at the rate, right? If you
Yeah.
just look at the rate, it was 6 significant years of pain. 6, not 2. It went from, you were at 9, 11, 13, 16, 16, 13, almost 14. It went back up, and then 12 and a half. Okay, you get down to within a point, but then it hovered at 10 for 5 years. It hovered at 10.
Yeah. This again, yeah. I mean, that's why yesterday or people talked to me about rates. Yeah, I mean, if I was a betting man, I'd bet they'd come down, but I'm not putting my money to work at that, right? I'll bet you $1, but I'm not going to put my $100,000, $400,000, $600,000 mortgage on that. You're kidding me. And this transaction thing is scary to me. I did not realize this. There's so much data in here. Transactions didn't get back to the 1978 peak for 16 years. Right. I thought we were going to have a housing crash for a couple of years, right? The Fed broke housing, blah, blah. This could be a decade in the making that
Yes.
transactions are down.
Yes.
Let's just look at new construction, right? So new construction was 817 in 78. When did we break 817? Oh no.
Oh no, it's like, Mike, it's like at least 10 years, if not 12. It's a lot of years.
Oh no.
Because they couldn't
Oh,
build.
no.
And look at how tepid.
98. We didn't do it until 98.
Yeah, 19 years.
Oh,
19 years. That's and Mike, look, do yourself a favor too. Look at nominal home appreciation.
Yeah.
Did it go up every single year, even though rates went from 9 to 16?
yes.
It went up
Again,
every year.
It went up every year of the 80s. I mean, I don't know what, yeah, it's
The
just
only
crazy.
one that really cries out is 0.8, and that's because people are off of 16% mortgages. But every other year, you're still looking at decent increases, 4%, 5%, 7, 8, 8.
Yeah.
It's crazy. This is
Yeah.
crazy.
So there's so much in here, folks. Again, the data sources are here. Go get them. So where the housing sales, ownership, income, it's all here. Home ownership. median home price right here, right? It's all there for you. But let's go back to the question at hand. Worse than 08. And again, I think 2023 is going to suck. That is my technical economic term. It's funny. There was an article on Business Insider today. It said CEOs think 2023 is going to suck. I'm like, where have I heard that before? All right. So here we are. So this is 2008. It's crazy to think that median home prices were 204 grand. We did start our downtick in prices that year, right? Home prices went down, for 4 years.
Yep.
So again, that's true. It'll be interesting to see if that happens, right? Because we saw the 9%. This is one thing I need people to realize. When you're trying to compare 2023 to 08, do me a favor, compare it to 09. 08's what all the idiots on TV talk about. 2009 was the worst year for housing.
Yeah, because the real collapse didn't start until September.
Yeah, exactly.
So you had the first 8 months of the year that while they were a little bit pukey, they were kind of flat. They were kind of negligible. It was more market dependent. And then in 09, it was everything hit the caca.
Yeah. And again, we saw the Fed cutting rates and we still had price declines, right? Look at that. Look at the mortgage rate.
Yeah.
It went down 100 basis points and we still lost 9%.
Now, Mike, real quick. So one of the things that I contend is that everything I think is going to hit harder and faster from a decline perspective, but I think it recovers faster as well. My belief is that a major part of this issue really stems from the fact that it's going to be solely rate driven as opposed to market driven, i.e. prices on houses and stagnation based on the fact that there's a bunch more supply. I really believe that I think that we hit like that time where things kind of stop.
Well, that's exactly what I think is occurring right now. This is phase 2 of the housing crash. This is where supply destruction meets demand destruction. I believe I called it September 15th, so we're a month into it, until March 15th. It's going to be frozen tundra or whatever you want to call that. Yeah. The only stuff getting done need to sell. So, you can find some deals. But come March 15th, spring selling seasons, I think that's when mom and pop come out and just start listing and see where we're at. And again, if rates are down, maybe it's okay. But if rates are at 10%, which there's a guy I talked about today calling for 10% mortgages in February of 2023. You throw a bunch of inventory on the market with 10% mortgages, it's not going to be good.
So I think that one of the other challenges too, and I did a video on my channel about this, homeowners being offered 10-year ARMs and at 5.5.
Again, we looked at the interest rate. I mean, 10 years is a long time. Most people stay for 8, so maybe that's safe. But again, I can only stress, you and I spent 9 months getting all interest rate risk off my balance sheet.
Yep, mine was 14 months.
I have no idea. I mean, it takes a time, right?
Yeah, 14
and money,
like
right?
9 months and 14 months. And that was something where we were in it every day. Having to set up appraisals, having to do this project and that project, making sure that you were ready to go get the appraisal, making sure that rents were in line and that they were full units so they could help the appraisal. So it is a massive undertaking and most people do it on one. And we were doing it on swaths of our portfolio, 9, 10, 12, 15 units at a time.
Yeah, absolutely. So if we're going to compare kind of 2023 to 08 and 09, the question, let's just go down the list. New home sales. That, it could be worse. I mean, I think we did in 2021 new home sales, we did 700. I think this goes down more than 50%. So yeah, we could produce less new homes in 2023. I absolutely think that.
Agreed.
I think existing home sales has a 3 on it. So we're going to be much worse than 08 and 09, in my opinion. I think total transactions will be sub 4.5, probably sub 4.4 total. I think much worse. Home appreciation. I have a hard time seeing national median home price being now 9%. And again, I want to stress that when people talk about 08 like it was an event, it wasn't an event. It was 5 years in the making.
Correct. This should be teaching people that even though we feel it, even though we see it, even though they believe it, even though all the YouTube videos are talking about it, even though it felt like the world was falling apart then, it fell apart for 5 years or for 2 years, and then had to kind of get pieced back together to even get to a negative 1.4.
No, I agree. So then interest rates are going to be interesting. And what I want to do here is, will interest rates drop a point in 2023, right? January 2023 to December 2023. I think there's a decent shot that they do. Not because of the Fed. I think the Fed is flat all year. But I think what happens is, after the Fed does their last increase in February or March, is the banks start competing. Right now, the gap between the 10-year and the 30-year mortgage, it's almost never been this wide. So I could see banks being more and more aggressive. So I think rates might be lower December than January, but I don't know. But yeah, what do you think?
Dion?
Oh, affordability is going to be atrocious. Affordability in 2023 at the beginning of the year might be the worst ever. Think about that. The worst ever. Dion?
Well, it's an interesting flip from the last 2 years being almost the best time ever.
Yeah, exactly.
If only people had bought them.
Yeah. Yeah, so I think affordability will be the worst ever in 2023. Certainly the beginning of the year. We'll see what happens at the end of the year. But yeah, the Q1 of 2023 could be the worst affordability we've ever seen. Income's up. We don't need to talk about that. Unemployment. Will unemployment be 9% in 2023? I hope not, but anything's possible.
Yeah. I think we're at 7 or 8.
Well, here, let's do this. Will unemployment be up 4 basis points? So will it go from 3.5 to 7.5? Because that's what we jumped roughly.
Yes.
I hope not. It's possible, but I hope not. Dion, what do you think? Unemployment go up 400 basis? I think that's like 5 million people unemployed.
I still don't see it. I think there's still too many jobs available for each applicant. There would have to be, we're going to hear about layoffs in sectors.
Yes.
And if there are some people who are just not willing to change the type of work that they work in. But I've got a few friends in the last few years where they wouldn't consider anything lower than $24 an hour because they can find remote work at that, almost no matter what background they had.
Yeah.
And so we're going to see that continuing. And I think that's going to be causing a shift in some of the states where that's not the normal wage, where that's kind of above average. I think that's going to continue to employ people there, where if you worked 6 figures and you were in a specific nation, you just won't work for less, won't change careers. I don't see it going above 6.
Yeah. I would agree with that, right? If I were to pick a number, I'd take the under on 6. Our inflation, it was actually negative in 09. That was deflation. That's Kathy Wood. Kathy Wood, baby, got your negative number. Will we be 4% by the end of the year? What do you guys think? CPI, headline inflation, headline, not core, under 4% December of 2023. What do you got, Dion?
I'm with Matt. I think it's going to stay higher.
Yeah, I
Mike,
so.
They're finally starting to get real rent numbers in there. They're finally starting to get real. Like I said, I think there's still that outside shot. We're still in the 8s, right?
Yeah. Well, headline, 8.2.
Yeah,
I think.
head 8 line and core is what, 6.6 or 6.4?
6.6.
Yeah. So core is still 6.6. I still believe that as rents continue to come in, because I think these other things are retrenching slower, I think that we could still get back into the 9s on CPI. We might not have hit the high.
Yeah, I think you're right, especially if energy and heating and all of that and food. I mean, it's
Mike.
We may not have seen the peak.
In 2 weeks, I was thrilled that I got under contract for heating fuel at $4.69 a gallon, which is $1.50 higher than I've ever locked in before. Wow. This week, $5.99.
Oh my goodness.
And that's in 2 weeks. It went from $4.69 to $5.99.
Yeah.
And we're still drawing out of the reserve. We still have a tax holiday. Like there's all kinds of things that are going to go away that are going to make it go up.
Exactly. 100%.
There's your stock, guys. All right, stock folks. Will this be worse? Look at, again, this is why I tell people not to compare to 08, compare to 09. Yeah. Stocks were, S&P 500 was down 59% in a year. How do you like me now?
Oh, man.
That's painful.
That is
painful.
Really bad.
What, and then oh, and then GDP, we'll do the last one. GDP was negative 2.5%. Yeah, we could get there. We could get there.
It's amazing.
So-
What do you remember happening in 2010 that it popped to positive again? Was it just all the, was it just all the money we were doing and stimulating?
I remember, I think this was when they did remember the 8,000 credit for buying a home? Like you buy a home, you get 8,000 bucks as a gift.
Cash for clunkers.
Yeah. And
Yeah,
then
cash for clunkers.
cash for clunkers was also 5,000 bucks, I think.
Yeah, so I think there was some kind of government stimulus. But again, this was essentially a bad 5 years, right? I mean, if you accumulate this, what is this? Some is 5. So GDP went up 5% over 6 years. That's less than 1% a year. That's not good. That would be what they call below trend.
Yes.
So at the end of the day, I think 2023 is going to be worse than 08, 09 on many levels. I don't know about 9% price drop. That feels heavy to me. I don't think we get there, but who knows? S&P 500 down 59%. I don't know. That feels kind of heavy. But for most other metrics, yeah, I think it's going to be, I think housing's in a depression and it only gets worse in 2023.
Dion.
Again, I'm really concerned for the person whose only income is their job. That should be the thing that people are focusing on. How do you fix that right now when, again, the most viewed videos that get over 300,000 views a video is everything's going to crash. Don't buy now. Wait. Waiting is going to hurt people.
In all likelihood, yes. Dion, tell everybody they can find you, my friend.
Right here on YouTube, Dion Talk Financial Freedom, where I get a lot less views because I talk about I talk about all the reasons why you should be buying.
Mike, tell everybody where they can find you, my friend.
One rental at a time, where we do a daily show. Would it be Sunday through Thursday now? Sunday through Thursday. We don't do anything on Friday or Saturday.
And me and Matt will be filling the void.
Yeah, I'm gonna have to start standing in front of my mirror practicing that stuff. Dear God, that's horrible. I don't want any more mirror time than I already have. And I think the main idea that we have here in this video is, I think Mr. T said it best when, what does 2023 look like? Pain. I think that's what 2023 looks like. It's going to be a tough year, and hopefully people are prepared for it. I know that a lot of people think that it's going to make a lot of landlords go belly up. I really don't see that being the case, because a lot of landlords I talk to are pretty well capitalized. They have more cash on hand than they have ever had on hand. So guys, as I always like to say, we try and create great content for you. Please make sure that you like and subscribe, and check us out on our live streams. Mike's au revoir of his live stream is tomorrow.
Tomorrow, that's true.
8 a.m. Pacific time, 11 a.m. Eastern time. Make sure you're there. Feel free to ask questions. And Dion's live streams are 4 p.m. Pacific time on Tuesdays. Mine are 11:30 a.m. Eastern time on Sundays. That's a lot of information, but if you think that's a lot of information, show up for those live streams. It's that much more. Thanks, guys. Appreciate it. We'll see you in video number 3.
Ciao.
Ciao.